We recently published an article on EVNet called Investing in a World with a Shrinking Stock Market, and I'm joined today by its author, Navin Lala, who's the client director at Old Mutual Alternative Investments. Navin, welcome to the channel.
Hi, Chris. Thanks for having me.
My pleasure. Unpack something for me. What sits behind this phenomenon?
Well, there's this, the JSE has been shrinking. It's not unique to us. I think being a domestic investor, it's certainly top of mind for us. And we've had lots of asset managers in the listed space, raising warnings about the ramifications of a continued exodus from the JSE. So if you think about the US market, using that as a proxy of the biggest market in the world, it peaked in the number of stocks that it's had listed. So at its peak in 1996, it was about 7,500 companies.
Right.
Right now, there's about 3,500 companies listed. So that's a material change. I think why it isn't so noticeable, it's because, call it 3,500 companies, a lot of companies to invest in. There's a lot of breadth and opportunity. And then, of course, you've got a market that's been performing well. There's concentration in it by way of the Magnificent Seven, but that market has been shrinking. The UK FTSE 100, or the FTSE in general, not dissimilar to South Africa and the JSE, that's shrunk from, call it 600 odd stocks 20 years ago to, I think, 300, maybe sub 300 at the moment.
Thanks, Navin. That's interesting. So why is this investable universe shrinking?
So there's a few reasons. I think the main reason being that companies are staying private for longer, and that's a global phenomenon. So typically companies would list so that they can get a lot more investor exposure, and it gives the company a lot more gravitas. But the downside of that is there's a lot of admin that goes with it and a lot of costs related to being a listed company. One of the main ones would be about, in terms of the effort and time it takes, how time consuming it is. It's that in the US, for example, they have quarterly earnings reports. Where in South Africa, we're lucky, we're doing biannual earnings updates and maybe quarterly trading updates. So in the US, for example, it's quarterly. It takes a lot of time, takes up lots of management time, speaking to shareholders in the investment community. So engaging with shareholders are important. They are critical. They're the client or the underlying investor, so to speak. So they are important. However, companies find that the pressures from the market to show growth in earnings has also been a bit of a distraction. So a lot of companies feel that they can stay focused by executing their long-term strategic objectives by staying private. So I'll give you an example of SpaceX. So we know Tesla is listed, that's a public company, but Elon Musk has chosen to have SpaceX stay private as far as he can, for as long as he can help it. And the reason being is he said exactly that. It's that he doesn't need the distraction, and it's allowed them to be razor focused and able to achieve their long-term objectives. And if you think about it, the objective, they launched the company, I think, early 2000s, maybe about 2003 odd. And the objective then was for a space logistics company, putting up satellites, etc., being a space logistics and cargo carrier. And the famous one, it's to occupy Mars, or have a colony on Mars and transport people there eventually. So that is, it's quite a massive objective, and there's a lot of blue sky dreaming in that. And I don't think being listed shareholders would have given them the patience and time to achieve their strategic objectives. At the moment, SpaceX is valued at, it's estimated to be valued at about 150 billion. and it generates revenue about $8 billion a year. So he certainly, by staying private, has been able to achieve that. I think there's lots of other examples. I know AI is all the rage at the moment. And if you think of OpenAI, who's been the leader in that space with ChatGPT, they're also a private company
Right.
that's having a massive impact on the world.
Thanks, Navin. That's quite interesting. So given the shrinking that's happening, what are the alternatives that are open for pension funds to utilize?
Well, thankfully, there are alternatives. And private markets or alternative investments, we use alternate private markets and alternative investments interchangeably. So forgive me for that. Alternative investments encompasses all the strategies outside of the listed space, your traditional assets like listed equities, bonds, etc., where private markets are the private businesses and the unlisted companies and strategies that are available to investors. As a matter of fact, Chris, investors globally have been investing in private markets or alternative investments for decades, and that continues to grow. So, for instance, I just want to share the slide with you just to illustrate the point. It's that you've got private market investments or alternative investments had an AUM in 2010 of about $4 trillion. At the moment, it sits around the $16 trillion mark, and it's expected to go beyond 20 trillion in the next couple of years. So it's envisaged that it'll grow at a compound annual growth rate of just under 11% per annum. So there certainly is lots of interest in not in private markets, and there's lots of allocations that have been made, and it's becoming increasingly prominent in investment portfolios, pension funds as well. So I'll give you an example. If you look at in 2012, global pension funds, we'll call it your P7 pension funds, had about, I think, 2.5–3% allocation to private market investments, and which is pretty much the level of where South African pension fund allocations are. Today, these pension funds these P7 pension funds have allocations in excess of 25%. So I just want to show you another slide which demonstrates the actual asset allocation of institutional investors. So if you look at your pension funds, the allocation to alternative investments is in excess of 25%, and your family offices, being your ultra wealthy families, they've been allocating to alternative investments a lot sooner, and it's been pretty mainstream for them for decades. And their allocations are in about the region of 50%. So while it's new to South Africa, it certainly is not new to the rest of the world, particularly the developed world. So pension funds, while they're at about 25% allocated to private markets globally, in 2012, they were at 2.5%, which is where South Africa is now. And I suspect that, like most things, South Africa follows the global trend. Another interesting part is if you look at some of these surveys, so we looked at the Africa Venture Capital Association that put out their annual survey, and they pinged a couple of hundred investors and asked them, what is your, for the next 12 months, how are you thinking of allocations? And in the African context, a whopping 85% said their intention is to increase the allocations to private markets. And globally, even though pension funds and the like have about 25% in private markets, globally, they still want to increase it. So 64% of respondents saying they're certainly looking to increase exposure to alternative markets. And I think that explains the previous chart, which shows the consistent growth in the asset class.
Right. Thanks, Navin. So given that, what are the opportunities in private markets for pension funds?
So there's a whole host of strategies within the private space. So the most, I think, well-known one and established one would be private equity. So investing in private companies, as you would do buying companies of the JSE, here you're buying private businesses, except they're not publicly listed. These are companies that our private equity team, for instance, would be originating themselves. So private equity is one of the key ones. And then there's obviously private debt. So private debt would be the likes of mezzanine finance and unlisted credit, where you are funding companies or privately outside of the banks. And private credit has been a big theme in South Africa for at least 10 years. And I think it certainly has performed well for investors in terms of the yield enhancement that it's provided. And then, of course, you've got various forms of infrastructure. So within infrastructure, there would be social infrastructure, where there would be hospitals, education, accommodation, housing, etc. And then there's, of course, the economic infrastructure, which we are well familiar with. Just to share an illustration for you, just in terms of what the opportunity looks like. So there's this global infrastructure super cycle underway. And depending on the research that you look at, it suggests that there's over $69 trillion in infrastructure needed by 2035 to keep up with projected global demand. So you've got a world population of about 8 billion at the moment. Beyond 2035, it's expected to be 9 billion. So if you have an extra billion people, you certainly need to cater for their needs in terms of providing, producing goods and services, which requires lots of power and energy. And then, of course, there's seaports, rail, airports, and roads in forms of the logistics. And besides human consumption, I mean, water's the obvious one. It certainly is used quite significantly within manufacturing processes and data centers as well. So all your AI type infrastructure requires lots of water in terms of cooling off data centers, etc. And then, of course, with the urbanization and an increased population, there's an increased need for more data. And that speaks to telecoms, keeping people connected and access to the internet, email, AI, etc. So while this may seem quite far away in terms of, talking about the global context, South Africa is no different. I think, with having recently have elections, it's just given us all an opportunity to reflect and take stock on, on our democracy, of how things have landed today versus the start of our democracy 30 years ago. So 30 years ago, the South African population was at about 40 million people. Today, we're about 60 million people. And I think, that's a clear example of how infrastructure has not kept up with population growth. So load shedding, for example, is a case in point in terms of power generation or increased power capacity has not grown to the extent that the population has. It's 50% larger South African population than what we were 30 years ago. So likewise, on the power sector or energy sector, renewable energy has been a key theme in the South African context. And that continues to be the case. But we're also seeing emerging issues around water and waste management. So our ports and logistics have also had lots of issues in backlogs, etc. So like the rest of the world, South Africa has a massive investment requirement in infrastructure. So we expect that, or it's estimated that there's close to about a 5 trillion rand funding gap, which is what the difference between what government can fund. So that creates this super cycle opportunity right on our doorstep for investors to access infrastructure assets on that would be investing across, power, roads, logistics, etc.
Thanks, Navin. That was interesting. So how do retirement funds strike a balance between the listed and unlisted space?
First, they coexist very well. They complement each other. So now I've spoken about a shrinking JSE universe and the rise of private markets, but it's not one or the other.
Right.
It's an and, where they complement each other. So your listed equities, listed bonds will continue to play an important role in a retirement fund portfolio. And we're looking at, in terms of the regulations, it allows for 15% in private equity and 45% in infrastructure. So we think they coexist well. And I think the holy grail of investing, or one of the key elements of it rather, is having different or independent sources of returns. So I think this allows investors to source returns outside of the JSE or the listed bond market. And if you think of long-term returns, we've had the SWIX, or looking at the listed equities, has done about 7 or 8% of the last 10 years, which is quite dire. Mm-hmm. If you think of inflation being between 5 and 6%. The bond market has done about, over that period, about similar, about 7.5%. So you're looking at your two key asset classes providing real returns of about, call it 3%, where equities should be giving us about 10% real. So allocating to alternative investments complements your portfolio, or I think augments it.
Right.
Until we start getting more confidence in our markets and confidence in foreign investors looking to buy our bonds. And there's, the JSE on most metrics looks very cheap, but it's looked cheap for a long time.
Right.
And investors, we need a bit of confidence to and certainty around policy, etc. And hopefully South Africa post-elections, so it looks like we're moving in the right direction on that. And I think that will allow for a re-rating in listed markets, which should be positive for a positive economic backdrop, is positive for private markets as well. Except you're not having all your eggs in one basket. You've got exposure to listed and unlisted.
Right.
And I think globally, you find that the economy comprises of a large portion of the economy is driven by private businesses or family-owned businesses. So it makes sense that the investment opportunities in public and private would be a combination of that.
Right. 100%. Yeah, look, as you stated, it's a growing sector, and it's going to be worthwhile just keeping tabs on that. So if you don't mind, I'm going to be pushing on your button a few times going forward, and let's check back in on this so that we can see the sort of progression over time. I think that could be quite interesting.
Thanks. We'd appreciate. We're very passionate about investing in private markets, and while it's relatively new to South Africa, actually, I shouldn't say new. Your big pension funds in South Africa have been invested in private equity for almost 20 years.
Yeah.
It's just now becoming more mainstream across more and more pension funds, largely driven by the opportunity set as well as regulations.
100%. So we'll definitely check back in on this going forward.
Yeah, we'd love that.
100%. Navin, thank you so much for your time. We'll certainly chat again.
Thank you, Chris, and lovely speaking to the EBNet community.